Now, back by popular demand, it's the Lance Roberts Show.
And good morning. It's Monday. Yay, yay. Woohoo! To the bright side, it's Tuesday Eve. There we go. Hey, I woke up this morning as I'm driving to work, right?
Yeah.
If you happen to live in Houston, I know we have listeners all over the country, and we appreciate you wherever you are. But unfortunately, I can only tell you about stuff that happens to me here locally because, well, this is where I am. But I did wake up this morning. I'm driving in, so it's early. It's dark outside, right? It's dark 30. And there's the most beautiful, it's, disturbing in a way, but most beautiful, lightning storm that's going on.
Oh, yeah.
Yeah, I mean, we're set up for some pretty torrential downpours today, but it hadn't started raining yet. But, normally you see lightning just pop a little here, pop a little there, but this was like dancing lightning. It was all over the place. It was really actually very fascinating.
It's like the 4th of July.
It was.
Yeah.
It was. It was kind of scary, but it was pretty at the same time. So anyway, speaking of that, storm, I created one this morning myself.
Oh?
Yeah. Hillary Clinton
Say no more.
tweeted out this morning that it's terrible that we have this, lack of toothbrushes and stuff, sanitary items down, on our borders.
Yes.
Right? Down here in Texas,
Yes.
especially where we live. Of
For
course,
the people who are coming in illegally.
right. So illegals come over, they don't have toothbrushes, they don't have sanitary stuff, whatever. And she goes, "This is a terrible problem that should be taken care of immediately. This is not about politics. This is about taking care of humans." And I was like, so I just simply tweeted back, "Isn't that what your charity is for?" I mean, she does have the Clinton Global Initiative.
Just saying.
And you have millions of dollars in this thing. Can't you reach out and
Buy
do
a few toothbrushes?
Exactly, right? And so this guy immediately tweets back at me, is like, "Don't be an ass." And I'm like, I'm being serious here. If we didn't depend on the government for everything, we wouldn't be $22 trillion in debt. Maybe if you want to solve a problem rather than complaining about it, and you happen to have a charity with millions of dollars in it, why not? So anyway,
What do you think?
So this tweet storm is now going on.
yeah.
So if you follow me on Twitter at Lance Roberts, you just join right into the conversation because
You just melted down the servers.
it's that logic thing, right? So I wrote an article this morning. It's called "Everything That You've Been Told About Saving and Investing is Wrong," and this is part 2 of a 3-part series I'm writing. And last week we talked about the problem with actual saving money, and people are just like, "Oh, just save 10% of your salary, you'll be fine. Just count on 8% annualized rates of return." There's a really easy function about this. It's called a pension fund. And if pension funds, if investing in saving, right, it's just saving 10% of your money and just sticking it in the market at 7% rates of return, if that actually worked, pension funds wouldn't be so massively underfunded because that's exactly how they operate. They depend on 7% annual rates of return. They save, and the reason they use those high rates of return of 7%, 8%, whatever it is so that they can require less in contributions from the employees, right? So instead of coming to you and saying, "Hey, I need you to contribute 30% of your salary to the pension," they can say, "Well, you can just save a little bit of your salary goes to the pension, and then the 7% returns make up all the difference." And it just has never worked that way. This is why in Houston, our municipal funds are massively unfunded. But it's not just Houston; it's every city in the country. It's Dallas, it's Illinois, it's any major municipal pension fund is vastly underfunded because of the fact that they've depended upon these rates of return that simply haven't existed. But here's the question for you this morning, just to put this into some type of perspective. Again, the article is on the website right now, so simply go by realinvestmentadvice.com and you can get the article. And like I said, join me on Twitter for the festival that's going on there of tweets. But here's a simple math question for you this morning. Over the last 130 years in the stock market, the markets have returned on average about 6% in capital appreciation, about 4% from dividends. Now, so that's 10% total annualized returns over the last 130 years. Sounds pretty good. No problem. Since the stock market is a reflection of the economy, not surprisingly, the economy also has grown at about 6% annually over the last 130 years, give or take. So if the economy going forward, now this is according to the Federal Reserve, the long-term economic growth rate in the country is right around 2%. Dividend yields are 2%. So what is your forward rate of return for your investments based on the current economic environment over the next 30 years, right? Because the economy is as strong as it's going to get, right? We are cranking it along according to the headlines. So if this is as good as it gets and the Fed is right, which is what we have to assume, then 2% plus 2% is your expected forward rate of return on your investing. So if your financial plan that we talk about, every week, Danny Richard here talking about financial planning, financial fitness, etc. But the bottom line here is that if 4% is, and I just did the math for you, just in case it's difficult to add 2 and 2 this early in the morning. It is Monday after all. So if 4% is your expected rate of return over the long term, that doesn't mean every year, right? That means a market can be up 10% one year, up 15% one year, you're down 10%, you're back to 4 over time by doing that, up and down, variable rates of return. If the expectation is 4% and your plan is at 6 or 7 or 8% on annualized rates of return, therein lies your problem. So the article's on the website now. Simply go by realinvestmentadvice.com. Also, while you're there, we have a class on diversification coming up Wednesday, right? Wednesday? This Wednesday? Yeah. This Wednesday. This Wednesday here at the office. 5 myths of diversification. So you can get registered for that now. So simply go to the website. I think we've got a few seats left for that at this point, maybe 3 or 4. So if you want to come, it's Wednesday. We're going to feed you a little lunch, talk about myths of diversification, what it means to your portfolio and your investing outlook. Go by the website now, realinvestmentadvice.com. Get ready for the class, get the latest article. It's all there for you. And like I said, join me on Twitter, @LanceRoberts. And just weigh into the whole Hillary Clinton issue. I'm just saying, if you've got a charity called the Clinton Global Initiative, I think you could throw a little money at some toothbrushes. And could you probably go to somebody, if you are Hillary Clinton, could you probably not go to like somebody like Procter & Gamble and say, hey, let's hook up and send a bunch of toothbrushes down there. We all get a tax write-off, and we get a lot of good publicity out of it. Just saying. Maybe there's such a thing. Got to do it. All right, be right back after the break. Don't go away.
She says we gotta hold on to what we've got. It doesn't make a difference if we make it or not. We got each other, and that's a lot for love. We'll give it a shot. Whoa, we're halfway there. Whoa, living on a prayer.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at LanceRobertsShow.com.